Good morning, ladies and gentlemen. My name is Vasil Dikov. I am a Senior Account Manager with GDMFX, and I'll be bringing you today's market outlook. We'll start with the North American markets and the events from there. We had the Labor Market Condition Index 2.9 points less than the previous at 1 point, and Donald Trump showed his economic agenda with a speech in Detroit on Monday. The Republican presidential nominee said he'd roll out more details in the coming weeks. Basically, it includes the sectors of energy, personal and corporate tax, trade, childcare, and regulation. The Dow Jones moved sideways yesterday, the Nasdaq as well. The Dixie is up to 96.24 from 95.70. The currency pair movements all were in the range of 20 to 25 pips all across the board. No major movements with the US dollar or the Canadian dollar. They were going to have the housing stats seasonally adjusted for the year from Canada. Moving on to Europe, from Switzerland, the CPI month-on-month 0.1 better than expected at minus 0.4, CPI yearly 0.1 better than expected at minus 0.2. The unemployment rate seasonally adjusted remains at 3.3%. The German imports for the month 0.4% better than expected at 1%. Germany current account not seasonally adjusted, 26.3 billion euro. The German exports were 0.7% weaker than expected at 0.3%, and the trade balance seasonally adjusted is at 21.7 billion euro. From the UK, the BRC retail sales monitor 1.6 better than the previous at 1.1%. Sterling lost ground against all of its 16 major rivals and is on a 5-day negative streak versus the dollar. The pound has been declining steadily after the Bank of England decided to cut the interest rate, and sterling lost 0.4% versus the dollar yesterday. The FTSE 100 lost 13 points, closed at 6,590 yesterday. The biggest movers were the pound versus the Aussie, 165 pips down, and the pound versus the Kiwi, 150 pips down. Later on today, industrial production month-on-month and year-on-year, manufacturing production for the month and for the year, trade balance, we're going to have the trade balance non-EU, total trade balance, and finally the NISR GDP estimate. It's a Tier 1 event. Moving on to Asia, from China PPI 0.3% better than expected at 1.7%. CPI month-on-month from China 0.1% better than expected at 0.2%. Chinese CPI for the year 0.1% weaker than the previous at 1.8 as the forecast was. The Chinese FDI yearly was as previously 5.1%. The Nikkei 225 was 144 points up. Biggest mover was the Aussie versus the Japanese yen, 68 pips up, and the Kiwi versus the yen, 50 pips up. In the Pacifics, from the New Zealand electronic card retail sales dropped with 1% and with for the year and 0.9% for the month. Tomorrow we're going to have in Australia Glenn Stevens from the Bank of Australia will give out a speech. And on Thursday, from New Zealand, we're going to have the interest rate decision from the Bank of New Zealand. And finally, the commodity section of the market. Today we'll have the API weekly crude stock, and also gold prices struggled in the North American trade on Monday, touching a 1-week low after the latest US employment report bolstered expectations of a faster economic growth. Some OPEC officials have said a global oil output freeze could be discussed at an already scheduled September meeting of the organization. But none of OPEC countries like Russia, the world's largest oil producer, said it does not see any grounds for holding production at the current levels. Crude prices edged lower on Tuesday on continued worries over a global oil glut as investors took profits on gains of nearly 3% from the previous session. The S&P 500 index had a range of 10 points. It is at 2,175 right now. Gold had a range of $9 down to $1,333 right now. Silver had a range of 24 cents. It is at $19.69 right now. Crude oil had almost a $2 range up to $42.61 right now. And natural gas is trading at $2.72 at the moment with a range of 5 cents. On Thursday, we're going to have the EIA natural gas storage change, and as usual, on Friday, we're going to have the Baker Hughes oil recount. That was all for me. Thank you very much and have a nice day.